Welcome to Earnings Central. In this video, we'll break down FTC Solar's fourth quarter fiscal 2024 earnings. We'll cover key financial performance metrics and dig into insights from the earnings call. All right, let's go. Starting with top-line revenue, the original estimate for Q4 was $11.6 million. The company actually reported revenue of $13.2 million, surpassing expectations by 13.8%. However, this quarterly revenue marked a significant 43.1% decrease compared to the $23.2 million reported in the same quarter last year. Moving to adjusted earnings per share, the original estimate for Q4 was loss of $1.03 per share. The company actually reported a loss of 96 cents per share, exceeding expectations by 7 cents per share. However, this result reflects a 16-cent greater loss compared to the loss of 80 cents per share reported in the same quarter last year. Now, let's dive into some additional performance metrics highlighted during the earnings call. FTC Solar reported revenue of $13.2 million, which hit the high end of their target range. This represents a significant improvement over the previous quarter, with a 30.2% increase compared to Q3. This sequential growth is particularly notable because it indicates a potential turning point after what the company described as a bottom in Q3. When we look at their gross margin performance, FTC Solar reported a non-GAAP gross loss of $3.4 million or 25.6% of revenue, which was around the midpoint of their guidance. While still negative, this shows improvement from the prior quarter's non-GAAP gross loss of $3.9 million or 38.3% of revenue. The trend is moving in the right direction. On the operational expense front, the company has made substantial progress in streamlining their operations. On a non-GAAP basis, operating expenses were $7.4 million, which represents the lowest level since early 2021. This is down from $10.8 million in the same quarter last year, indicating significant cost-cutting while still supporting future growth initiatives. Their adjusted EBITDA loss, which excludes approximately $2.4 million from stock-based compensation expense and other non-cash items, was $9.8 million. Importantly, this beat their guidance range and compares favorably to losses of $12.2 million in the prior quarter. Looking at their order book, FTC Solar's contracted backlog now stands at $502 million. This reflects $67 million in new purchase orders since November 12, 2024, along with $65 million in adjustments to existing projects. This substantial backlog provides visibility into future revenue potential. From a balance sheet perspective, they ended the quarter with $11.2 million in cash. However, they've subsequently strengthened their position with a $3.2 million cash earn-out from their investment in Dimension Energy and are upsizing their promissory note, offering to bring in an additional $10 to $15 million in the near term. Now, let's shift focus to some of the key insights and takeaways from the earnings call. Perhaps the most significant development is the multiple gigawatts of new agreements they've secured. In total, they've added more than 6.5 gigawatts with Tier 1 accounts to their backlog, representing multiples of their current annual revenue run rate. This points to substantial growth potential in the coming quarters and years. The crown jewel of these new agreements is their 5-year, 5-gigawatt supply arrangement with Recurrent Energy, one of the world's largest utility-scale solar developers. This deal spans the US, Europe, and Australia, and will utilize both their 1P and 2P tracker technologies. The first project revenue under this arrangement is expected to begin in the second half of 2025. The company has also significantly strengthened its financial position by adding more than $30 million in additional liquidity to their balance sheet. This provides runway to execute on their growth strategy and navigate toward profitability. FTC Solar is also positioning itself to take advantage of domestic content requirements. They're already taking orders for 100% domestic content, which they expect to have available in Q3 of this year. This capability could be a significant differentiator as more developers seek to qualify for additional tax credits under the Inflation Reduction Act. The company noted a substantial increase in their bidding activity, with their bidding run rate recently at nearly double what it was in the second quarter of last year. This increased commercial traction suggests growing market acceptance of their product offerings, particularly their 1P Pioneer Tracker. Looking forward, FTC Solar has reiterated their expectation to achieve adjusted EBITDA breakeven on a quarterly basis sometime in 2025. With their Q1 2025 guidance showing a 44% sequential increase in revenue at the midpoint to $18 to $20 million, they appear to be on a trajectory toward profitability. CEO Jan Brandt emphasized that the company's 1P tracker technology provides significant value to customers by making installation easier, faster, and safer. He noted that tracker installations can make up more than 60% of the labor need on a solar project, so the efficiency gains from FTC's solution translate directly to cost savings for EPCs and developers. In summary, FTC Solar's Q4 results and recent announcements paint a picture of a company at an inflection point. While still operating at a loss, they've made substantial progress in building backlog, adding liquidity, reducing expenses, and setting the stage for growth. Their strategic focus on their differentiated 1P technology appears to be gaining traction, particularly among major industry players. That wraps up our recap of FTC Solar's fourth quarter fiscal 2024 earnings. If you found this recap helpful and want to stay on top of more earnings reports from other companies, don't forget to subscribe. We've got plenty more quick and easy breakdowns coming your way from Earnings Central.